Hello traders, welcome to the weekly market outlook. As usual, my name is Dima and I will be taking you through some of the charts for this week, the short list of opportunities. We are coming up to the end of the summer months, beginning of September. Let's see how the market plays out. We do have a few opportunities for us to look at in today's analysis. We've got some here with the bullishness of the dollar and quite a few dollar pairs. But before we do that, as always, let's have a look at the economic calendar for this week and see what awaits us so that we can factor that in to the charts, into the technical analysis, and then go from there. Okay, so here we are on the calendar, and as we can see, we've got Monday 28th of August, nothing there. I just filtered it out to the highest impact news. Tuesday 29th of August it is. We have some USD news, a New York session. We have the unemployment rates from Japan. On Wednesday the 30th, that's right, we've got a little bit of Swiss news and again minor US news. And 31st, Thursday, got some news from Europe, that's from Germany, but could affect the euro a little bit because Germany is the main powerhouse manufacturing base in Europe. Then we've got initial jobless claims, but of course the big one, this being NFP week, is the non-farm payroll at the New York session on Friday. But just before that, we've got some Swiss CPI figures to come out and the GDP figures from Canada as well. So a few things to bear in mind. US, we've got Swiss, and we have a little bit of European based news, euro, bear in mind there, and the unemployment rate from Japan there. So that's for this week. Let's see how we can match that up with the charts. So here we are. We're going to start with the dollar index as usual. And what we can see is bullishness on the dollar. Very clear to see that bullishness. We've broken this through this structure. We have hit this target from last week and now we are heading into the next one up here. So that's quite clear to see. If we zoom out on the monthly, here's that obvious swing high. And the next one after that will be up here. Let's look on the weekly. Here's that swing. So bullishness on the dollar. Let's have a look at the others. So these are our shortlist for the week, and I'll see why shortly why I've picked those. Okay, so let's begin with euro as we did last week. So last week we had this expected continuation, this drop, which we have actually done, hit this target, which was the target for the week. And now the question mark is where we're going to next. Well, the thing is, we don't know whether we are going to reverse here off this deep retracement or we are going to break into new lows. So what's the idea here? Well, we will have to break this swing right here in order for us to continue down lower into the next lows. So this now becomes our reference point to look from. So let's have a look on the daily. This is what we had last week. So this is what was expected. We had this high created. Now we have a new high, so we can shift our new invalidation point to this high. And now what we'd want to do is we want to see a break of this low ideally, so to confirm that we're not actually going to reverse. At the moment it does look bearish and would expect it to continue that way. However, we are at an area where we could see the end of the retracement. You can see these wicks appearing on the candles. So there's a little bit more uncertainty. It would be nice to see continuation. That would be the favored outcome. However, the break of this low and then a retracement, something like this to a better price would be the favored. I got a little, there we go. It's a bit messy with this arrow. So something like this, and then after we create a level, let's go look on the lower time frame. This is what I'll be looking for, a swing, then coming up to a better price, and then continuing on its downward journey with the bullishness of the dollar. So pairing those two things up, and now let's have a look at the next pair. So here's our invalidation point. So this means that if we breach this level, then this idea is no longer valid, no longer high probability. Okay, right guys, so let's move on to the next one. There's another major pair, another dollar-based pairs. As I just mentioned, we do have a few dollar pairs this week, so we don't want to be trading them all at the same time. You do want to manage your risk and pick the one that is highest probability. I'm just giving you a little range of options here so that you can, depending on which charts you trade, you can have a choice of what you want to look at and focus on. Go into the weekly once again. So here's that weekly picture. We breached this high, and then I'm going to look at the next high, which is obviously up here to the left, and then all these following highs after that, and we'll see if we reach this extreme high right here. So for now, we've got this bullish dollar, came down, retraced, and made a swing, and from here on we're going to look at the next level, which is about 120 pips away. Okay, let's go down to the lower time frame. So what we've got here is a new high being made. Just poke the high from here. Let's see if we drive higher, and the first scenario would be a drive higher, retracement, and continuation. Therefore, the level would be up here. If that's not the case and it doesn't do that, then the level of retracement into a better price as a second option would be down here. So something like so. So that's the other possibility. And then driving higher into first level and possibly the second one. We do have a significant whole number here to bear in mind. So 148 dead. We have the 149 dead here and the 150 up there. So these are levels to bear in mind where the market can turn around from, can pause, and once we reach into there, then we'll have to see whether we go to the next level. So that's the outlook for dollar yen. Once again, same issue as I just said. Dollar pairs, we do expect a more bullish dollar and bearish on other currencies linked to the dollar. But let's have the confirmation. At the moment, we see that this is hinting at strength. Let's see which setup is actually clearer as we go through the week. And of course, the NFP news is towards the end of the week. Also, the other thing you want to bear in mind is that when the market moves towards big news, it does have a tendency to range, and sometimes we can be a little bit range bound, and because of that you may want to trade more carefully during just before big news, especially NFP week. It does tend to happen. So that's just a little disclaimer, a little note for your journal diary. And yeah, if you like this video, guys, remember to hit the like button, subscribe as well if you want to continue to see this video and get updates. Right then, that's the dollar yen. Let me go to the next one, dollar CAD. Once again, another dollar pair. So again, we want to be wary of what's happening here. This is one of the lesser favorites, I should say, for the week because of all this choppiness. So we already have these levels which are very close by, very nearby. and don't know whether the market will blow through them, turn around from them. As you can see, many levels here. So it's kind of like there's resistances that the market will have to go through. It's not like the other pairs. Because of that, dollar CAD is a less favorable one in my eyes for now. And again, I'm gonna draw a similar scenario to dollar yen. So break through the highs, retracement to a better price, and then continuing to the upside. And this will either be a level or we may have a level here. That's the thinking behind that. And let me just draw an invalidation point. So the invalidation will be down here. So if we go below, then I would no longer consider this a scenario to buy this market. So that's the dollar CAD idea. We also have a little level here too, but if we retrace down to here, that's also a possibility. However, I do want to see a nice big push to the upside to show us that the market is going long and continuing that. We may just get a full bullish move. The market could just run without us too, so that's fine. It just happens. Sometimes it's just the way it is. You don't always get the entry that you require, but you just stick with the process. That's the dollar CAD. Let's move on to the next pair. So we've got dollar Singapore here. Once again, another dollar pair. And as you can see, there's a kind of a pattern developing here, isn't there? On all the dollar pairs, we've got new highs created, so continued bullishness. And it's showing us that the bullishness is something to take more seriously because the probabilities are more in our favor. Now, we've broken these highs, and obviously the next high would be here. And the next high after that would be here. Now, we've just hit this high, so what I'll be looking at is this high as the next point of call, and that is about 180 pips away or so. So here is that weekly picture. We had this indecisive, almost doji candle on the weekly. So from here, what are we going to look at? Well, we're going to look at, as always, preferably a better price and then continuing higher. Now, the invalidation point I'm going to mark is over here, and we do have a bit of a level over here. So first scenario is favorable scenario is a move to the downside and then continuing higher. Of course, that would be a much better price. And second scenario would be a break of these highs, pull back, and then continuing to that second level up there. So once again, I'll be looking for a level here. And as you can see, it fits in with that green line. We can now delete it now that we've reached it. And this will be the idea for the buy as another alternative to this buy here. Of course, you always want to get a price, you want a cheaper price, but we don't always have that. And if the market rips higher, then we're going to look for the next swing. That's the idea. So the probabilities are there. And of course, if we just continue lower and smash through this, then if this invalidates, this will be the point of reference where we're no longer interested in the dollar Singapore and wouldn't be looking for a buy anymore. So that's how I'm looking at it myself at the moment. If you have any comments or you want to share your charts, you're welcome to comment below this video. Right, let's move on to the next one. So we're done with the dollar pairs. There's quite a few of them. As I said, you want to watch out for that. Now let's move on to the other pairs. This is the euro pound that I was looking at last week. And as I said last week, this could have been a possible reversal. Now that we have moved higher, it seems that the market is hinting at a higher prices, that this is indeed a reversal. Now, first of all, looking at the weekly candle, this looks like a piercing line bullish. So if you want to check out what piercing line bullish is, we have a open of the previous candle, gapped lower, moved lower, and then closed above closed above the halfway mark. So here's that halfway mark. If I just use the Fibonacci of the body, that's the halfway mark of the body, and here is that halfway mark. You can see we closed above. So that seems like a reversal sign to me. And now let's see whether we get a break through all these levels that we drew out before. Going to the daily, lower time frame, this is what we were looking at, and still waiting for that if we actually get it. Let's go to the 4 hour. Here's the 4 hour. Now, do expect a break of this high. That will signify a very strong bullish continuation, even more confirmation. However, whether we get this break or not at the beginning of the week, I do prefer to see better prices down here. This will be a really, really nice price. Here's the point of reference. So a break below would invalidate this whole idea. And then once again, scenario A, the better price, much better price down here, and a reversal to continue higher, or a break of this high, first of all. And then once we get a very clean, swift break, then retracement and on to the next level. Just make it clearer. So here would be that level if you stretch it out to the left. So a break, clean break, pull back, and then continuing to the upside would be the other scenario. So let's see how that happens. The price action will give us the clues, will tell us what's going on, and then we'll go from there. So that's the euro pound idea. As this being the reversal, this low, you can see how hard we went into this level, broke through this low, didn't close, and then bounced right off, rejected right off, and then went higher very, very quickly, which is a hint at a reversal. So once again, euro pound, that's the bigger picture. Let's see if we get this higher, this idea to go higher, if it holds. Hope that's helping for you guys. If you are watching this and if you've got any confusion on the markets, then hope that this is helping you out. Let's move on to the next one, Euro New Zealand. Let's have a look at why I picked this one. First of all, on the monthly, very bullish so far. We broke through these highs. We now broke through this high, and the next high as a target will be this obvious one here. We do have a bit of a level here as well. That's a little bit of a way off. Let's go down to the weekly. Here's that next level, which is, just look at it, that is about 350 pips away. And after that, we have the next one, which is about 550 pips away. So we do have a nice big move, lots of pips to go if we are going to continue higher. Now, the weekly very clearly bullish. Last week closed bearish, and it looks like an engulfing candle. However, this wick is a bit of a funny one. It did not close below the low of last week, which signifies that this was not a reversal. This could be looked at as a fake out. If it did close below, I would say that we now have a pattern of these three candles, with this being a star pattern. However, that did not happen. What happened is we just went into this area and then looks like rejected off it. With that in mind, what we can see on the daily is this candle being bullish, which signifies a possible reversal happening here. And if that's the case, then what I'll be looking at is this low right here to be the invalidation point. We may get another run lower, maybe not, maybe we just move higher. Now, what would I look for? Well, we're looking for this level to be broken, a run higher, retrace, create a swing, and then move to the upside. If we move to the upside, here's our idea for a target. And you can see this level. I mean, if you want, it's quite clear to see that this is a retracement phase, but if you want to draw the fib, here's the 62 level. We hit the 62 and almost touched the 71 right here as well. Let's see if this is indeed a reversal. Let's go to the 4-hour. 4-hour giving us some clues here. We have broken the structure here. That's good to see. And to have a confirmation, to have increased probabilities in our favor, this is the favored scenario. So move higher, very clean break, very clear bullishness, come down, get a bit of price, and then this low should hold. I am going to account for the fact that we can go lower once more. So if we do go lower and create an equal low, or perhaps even fill in this gap here, then we can account for that as well, and then look for a reversal down here once again in this area and create this kind of W shape and then move higher. So that's the other possibility. We'll leave the market to tell us how it wants to play out, which way it wants to go, how it wants to actually proceed from where it's at the moment. That's the Euro New Zealand. Out of, why did I pick Euro New Zealand? Well, out of Euro and Pound, Euro looks bullish because we have that possible reversal, and out of Aussie and New Zealand looks to be the weaker of the two. So basically what I did is I paired those two up and then had the Euro New Zealand idea, which seems to be playing out in the market as well with this real bullishness. Let's move on to my next idea. So the next idea for this week is the S&P, and S&P looks bearish. As you can see, we had a break of these lows, and now it looks like we may have another break about to happen below here. Last week was a little bit indecisive, however it was an inside candle and still weak, and all the weeks before that were also to the downside, also weak. So that indicates continuation of the weakness, and let's see where our target would be. Well, the first one would be this low, and then the next one will be this little gap you can see here, and after that the next lows. So this is the idea for the week. You can see we didn't break the high of last week, we just retraced and moved down lower. So let's see the continuation lower to these next lows. Oops, let's get rid of that. All right, we want the 1-day chart, thank you very much. Okay, we've got a retracement here, a rejection, so another swing, and continuing to the downside. We have already retraced a little bit here on the Friday. Let's have a look on the 4-hour to get a better picture. There we go, we retraced, we broke these lows, multiple lows being broken, so hence that severe weakness. And now we can just look at a turnaround in this area with this high holding the fort. This would be the invalidation point. If we break through it, however, if we do hold, then we are possibly looking to go lower. We're already here at this point, retracement phase, so if you want to take a risk on a Sunday, Monday, I would say it's a bit of a riskier thing to do. However, the safer bit would be to wait for an actual proper move lower or a break of this low and continuing to the downside. So that is the idea on the S&P, continued weakness. Here's the expected high, and that's the thought for, oops, let's just get rid of this again, keep hitting the wrong button. Okay, there we go. Right, so the daily is clear to see. We have this swing that seems to have been formed and now continuing lower, lower, lower. We do have a bit of a gap in the price here, which we are likely reaching for. If you see things differently, by the way, you're always welcome to place a comment and yeah, upload your chart if you feel that you've got something else in mind. Let's move on. Let's go to oil finally now. This is one we looked at last week as this being a reversal point, and that has indeed happened. The market went lower, 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 lower. And let's have a quick look on the weekly. There we are. Broke the low of last week. We did have another wick to the downside, which is a bit of a tricky one because it indicates bullishness coming in rather than bearishness. However, we still closed bearish, so the market is still bearish, and this was the first target, first idea, which we haven't yet hit. Okay, now if this is a swing, we went lower, now we're looking for the next swing. So we broke these lows, so let's just remove them for a second. Let's go for the lower time frame. Let's look at the next swing. So the next swing is on this level possibly, and once again it would be nice to see the proper turnaround. So from here down to the downside, breaking this low, creating the swings and moving lower, which is what we drew last week. Now once we get to this level, we'll have to see how it unfolds, whether we break lower with the force and reach the second level, or we bounce off it. But at the moment, this is the first point of reference, and in fact, it's this little swing point right here. So I'd like to see the nice turnaround from this level. This is no longer needed, and this is now the invalidation. So a break through this would invalidate the idea to sell, and we'll have to reassess the market when we get there, if we get there. That is oil. And that's it for this week. Those are the charts. And that's what we've got. And as I said, the focus is on the dollar. We have some clarity there. The dollar CAD is a lesser favorite. Dollar yen is a good one to look at because of the weakness in the yen across the board as a whole, as a basket. And yeah, we have those other pairs that we looked at. So euro pound, yeah, we've got S&P, euro New Zealand, also a decent one. So as always, manage your risk. Remember to watch out for the news, the news week, NFP week, and we also got a start of a new month, which means that now that we are going to close the last monthly candle, we're going to create a new one. And that typically involves a little bit of, I should say, discretion, or a bit more patience is needed, because when a new candle opens, typically, especially in the month, you want to be a little bit more wary of what's going on. Okay, that's it for this week, guys. Remember to check out the website if you want to see up-to-date news of what's happening in the market on a regular basis, and click link and subscribe to receive notifications for these videos. We're going to be uploading these technical analysis and overview of the market 3 times a week. So that's Sunday, Tuesday, Thursday, with an update on Tuesday and Thursday of what we did today at the start of the week, of what we've covered. Okay, thank you very much for watching, and have a good trading week, guys. See you on the next one later this week when we have more information of what the market is doing. Okay, bye for now, guys.